Hey everybody, this is Booksy. I just want to say thanks for um, the kudos and all the other things on Reddit, on the Discord, and on YouTube. Nice comments, and I appreciate it. I know that this is making the rounds. This cycle theory stuff for Ater is making the rounds on StockTwits and some other places. I think that's a great thing. I am not looking to get YouTube famous at this time. Um, I just got a lot of other stuff going on in life, and honestly, like probably not the best personality for it, anyways. Um, but that being said, I had a question come up on Reddit, and I think it's a really good question. And somebody was asking, why does it matter? Like, how would this help? Um, and I'm gonna give basically like two really short answers. So the first answer is, why does any TA help? So it's more like that, right? Like technical analysis is just studying patterns. So if we have a pattern on a stock, right, and we see this pattern repeated, then, and it's repeated a lot, right, on a Ater, then we can at least anticipate, how the pattern 9 times out of 10 is going to act. Now, there are exceptions, and like here's one where this giant wedge shape was created. I'm calling this the gator snap. So this is the snout, right? So it was created, it was birthed, if you will, during the creation of this larger channel, which was created by a previous gator snap, and the cycle reset. I'm on the 15-minute time frame, so it's not going back all the way. But here, it actually did kind of follow through with the whole pattern. So we had a breakdown, it ran up, and then it created a new wedge right here very slowly, very slowly. And you could probably draw this different ways, where maybe there's another small one right here. You can kind of see it. And then there was two U's, and it created a new wedge. But this wedge is an exception. It did not break the way that the others did, because, I mean, look at the trend, right? In this case, it pretty much, and maybe you could draw it more like this, it pretty much broke up like a normal pennant would in a bull run, right? So we're running up. Here you have a little bit of consolidation, and then we keep continuing up. So there are times where like this is not going to pan out, and that's part of TA, is just knowing that maybe it pans out 9 times out of 10. But every time it doesn't pan out, it doesn't mean you just throw the baby out with the bathwater, right? That's a really dark saying. But the point is that like you don't throw out the whole theory just because it doesn't work out one time. Um, so TA is really only as useful as you want to make it. I mean, if I'm looking at this on a shorter term scale and I'm just looking for opportunities to buy, then um, you know, I'm going to assume that when we see these wedge shapes, these gator snouts, that it's probably going to break down. And sometimes it won't. Like right here, the breakdown was just so minor, okay? And then it had the second U, but really, like, you have to look at this in terms of the bigger picture. And if I'm looking at this in terms of the bigger picture, that's this blue line right here. And I wasn't expecting it to just go straight up. I thought it was going to be, for earnings day, I thought it was going to be more like, I thought we would actually see some green on that day, that next day. Instead, it ran overnight and then dropped. But so the chart looks weird. We had a gap fill. But the point is that like I'm looking at this and I'm just seeing like, okay, well, we're in the middle of a bigger pattern. All right. And this right here is basically like a new, I'm calling it the gator tail. It's a new tail, like, and you have the tail, and then you form like the belly, okay, and then we see how high that belly goes, and then we have a new head for the gator snout, okay. So basically, like, we're looking at this wedge, and it breaks down. So if we're following this line, we can pretty much assume that for the most part, it's going to stay consistently in that line, and it did. I mean, I drew down on these little use maybe a little farther on some of them, but it really, if you look at it, it pretty much just kissed that line every time. So when I'm looking at this, I'm not really expecting it to be knocked way down. In addition to that, if we go to like a greater time span here, let's go to like the 4 hour. Oh, if you remember, I drew this line because I think there's a support here, and it's based on this, right? And I could be wrong. This second one certainly could go down a little further. It could consolidate beyond this and then run up. We don't really know for certain yet. I'm just basing these estimations on these bars and how many bars it's taken to complete certain cycles, 9, 5, 15 and 9, 15 and 9. You see that repeated here and here and here and here. And we're in possibly a new cycle if this is the new, right, middle of the W, all right, where this is a shorter cycle. My point is that you're looking at TA as a way of kind of anticipating possible moves. Doesn't always have to happen, right? But it could happen. And it's a good way to consider trading. If I were swing trading, I'm not swing trading Ater, I'm just holding it. But if I were swing trading, I would look at TA as possible entry and exit points. I think I moved my line a bit. There we go. As possible entry and exit points for making swings. So instead of buying up here, which by the way, this thing was shorted down, right? People were like bragging about it, like, haha, good, thanks for the money, bulls, because they knew this thing was going to gap fill. Like that's what the algorithms are going to be doing. They're going to be trying to get the price discovery. So the people who are shorting, they knew that, okay, when we open up, it's probably going to gap fill at some point. So it's a pretty safe bet when it gap fills 95% of the time, right? To make a short position from $8 down to here. Now, do they think it's going to still go down? I don't know. If they're smart, I think they would get out in this area. I think they would start covering, which would probably help drive this action too. If I'm a bull and I'm bullish on the stock, I'm seeing this price action right here. I would have thought, maybe the bottom of this bull, when we see it start curving up, like this is a good buy opportunity. And then maybe if you just want to wait for confirmation, you don't want to guess that this is the lowest point, because you never know. I guess it could dip down again, and then you'd have to redraw this like that or something, right? But if you didn't want to have to guess, you want to wait for confirmation, then you look at the patterns that have happened in the past, and you say, well, maybe I get confirmation after this, and I do the second wave only, if I'm just trying to be really conservative. Because I know that every single time, basically without fail, except for when it was, sometimes when it was maybe trading more sideways. See that? That didn't really work out here. It didn't go up. But if you had bought here, you could have held and sold like up here. I mean, it wasn't immediate, but it still ran up. If you were in a downtrend like you were here and you bought in here or you bought in here, you definitely would want to sell if you're swing trading this before these indicators sort of turn and the people start selling off. So the point is, knowing TA doesn't guarantee anything. It doesn't mean anything for the stock necessarily. But the more people that are in quote unquote intelligent, and I don't mean that in a mean way. I just mean the more people that are aware that a stock can move a certain way, the more likely people are to make good decisions based on those movements. So if I were into buying this stock, and I mean I am, but if I were just, let's say generically, somebody was into buying Ater, then they would want to look for good buying opportunities. And this is interesting right here. This could mean some things. It could mean that maybe we got to pull this out a bit and it's going to keep running up from here. And this is actually the line. It got a little overextended and then this is the actual line. Or it could mean that's it. That was the run and we're going to see a new wedge form. And see, I can't tell you right now based on what I know whether or not that's the case. I would have to look at like volume and stuff. If you look at this, you can see there was a massive sell-off here. And I'm not sure if that was, again, just somebody trading from here to here. More than likely, someone's entering a short position or something, and they think it's going to go down. But this right here, this indicator just broke out once. If it breaks out again, I'd say it's going to run more, because I know this indicator signifies. And then this one's curved up. So, I mean, looking at this, I was just doing some TA, basic TA. I think it's trying to get back into this major wedge, the bigger wedge structure here, and it's respecting these lines. Like when it hit this line, boom, like got knocked down. So I don't think it's going to just keep falling, but a lot of that depends on volume. And sure, I mean, these indicators could always turn and head back down, at the end of this 15 minutes, which is what my time frame is. So maybe we go to different time frames and look at things. Anyways, that's how I would interpret it, right? But I wanted to show you yesterday, I took a screenshot of this, and I came up with what I thought was probably a reasonable estimate of where this might go. And then today I had to adjust it just a smidge. It was a little wider than I had drawn. I drew it like almost straight up. I thought I was going to try to retrace back to this triangle really quick. But then this morning, basically this was the price action. And yeah, so like, did I foresee the future? No, I just estimated based on what has happened 99% in this stock, 99% of the time. One thing I couldn't tell you yesterday, and I still really can't tell you today, is how high does this go? I don't know. I think I've been looking at volume and trying to figure out maybe if there's a correlation between this dip and this dip. If we could estimate based on this dip where this is going to go, that would be super valuable information. So at least when we see the first dip, we kind of have an idea of maybe how the second dip will respond. But right now, I'm just seeing there's too many factors that are just sort of variables in this that I can't quite figure out yet. But the point is now look at where we are. Okay, so now we're in a slightly different situation. You can see that sometimes it comes off the curve quite a bit. Like the curve is still there, right? But it came off and it actually tested this resistance line, and then it came back down to the curve. So this could be very likely, I mean, it's possible. And we can look on this on a shorter time frame. Let's go to 5 minutes. Yeah, I mean, sure. This could be like, see how this is dipped below? I mean, that could mean that maybe right here we sort of launched off and now we need to find it again. Okay, it doesn't mean that, and this is just guidance, right? It doesn't mean that it's all wrong, and we'll see. I mean, maybe it launches right here, and then we can say, okay, there it is. I mean, it looks like it's about to. That was a big sell. The green is kind of diminishing, but if we see this kind of push up, maybe we'll see it re-enter and then gain some momentum. But my point is like, this would have been a good buy opportunity if I trusted the TA. Like, this is 610. And if this ends up playing out on the short term, we get back in this wedge, then on the long term, I'd be looking at this blue line right here. And you might draw it differently than I do. You might draw it down here, all right, and think that's the touch point. I kind of think this is probably more like it, but we'll see. And it looks like it kind of did already. Maybe it already did touch this white line, so maybe it doesn't have to come back. We'll see. I don't know. Maybe this breaks and turns into a new wedge right here and goes down to here, and then we get another W back up, and then we kind of keep going. I mean, we did it like right here, right? We kind of would race up, W down, race up, W down. So it's possible to happen again. But then long term, I'm more bullish, right? I'm looking at how far can this thing go up, right? And I already did a video about that. I'm not going to do it again. So the second reason why TA is important is because emotions. So I know that when people get into these stocks, sometimes they're brand new traders and sometimes they're really experienced. And it doesn't really matter if you're brand new or if you're experienced. I'm the same way. I've only been trading like 10 years, and I say only because I think that there are people who traded their whole life and they've seen this kind of stuff happen over and over and over again, and they really are numb to it. I'm not completely numb to it. Like, when AMC was tanking yesterday in the overnight, I kind of knew what was going on behind the scenes, and I was a little less emotional about it. But it still affects me. Like, I get up and I'm like, man, I really hope this runs today. Like, I don't want to see more red. And we might see more red. We might even get down to like 36, 37 on AMC before, we really get liftoff. That's my hope, is that we get liftoff based on the technical analysis, based on what we've seen. But, same with Ater. You get excited when you see it run overnight, but I knew, and I told the Discord that I felt like, yeah, I mean, you have to maintain volume to maintain a run. So if you get like 5 million volume to push this up, but then in the morning there's no volume, no buying pressure, then it's going to go down. And especially with gaps, because the algorithms are going to try to get it, right? So it's like you're working against multiple forces. And that's why I was like, yeah, I mean, I'm excited about this run, but I'm also like, whatever. I mean, it can come back down. And I know that after it gap fills, we're more than likely going to see it reverse again because there's this larger pattern going on, and I don't see it tanking from here. It could, but I don't see it. Like, I don't see that in the technicals. So that being said, I think it really is a helpful thing to know the TA and know the cycles so that you can anticipate what the motions might be and so that you know what you're looking at. If you looked at this like I did and you saw that gator snout, you saw the tail here in the belly, and then the gator snout ran up, and you know that it's going to go somewhere, right? It's probably going to form some kind of a pennant, right? And then it's going to go, you know. Um, and even within here, there's kind of a smaller pennant that formed, and then it sort of did this W down. It seems to be the case that that happens quite a bit, that there's like patterns within patterns within patterns on this stock. My point is like emotions are really important. And if you're trying to play for a short squeeze, you're going to have patience, and you're going to have to know when to buy. You're going to have to know when's the best time to accumulate. And you're also going to want to be prepared for those red days. And just having that in the back of your mind that this thing is predictable, at least right now, is very, very helpful. So anyways, that's why I think TA is important. That's why I think this understanding and knowing this pattern and letting other people know this pattern is important. It's not so that it's not like secret information, right? Like we don't want to, we can't assume this means that it's that we are going to have a squeeze, right? It's more like, okay, let's look at everything all together. Let's look at the bullish, prospectus for this company. Let's look at all the institutions that I bought in. Let's look at the volume charts. Let's look at volume indicators. Let's look at the technical charts, the bars, and let's just look at what we're seeing. Let's describe the action. Let's all use the same language. And then, individually, we can all make good decisions about where we want to buy this thing and how we want to see the price move.